What's good to everybody on YouTube, social media, and the interweb? It's Luther Wilson III, and today I'm going to talk about private equity, private money, and leverage. Okay, so for those that don't know, I'm a real estate pro here in the Kansas City market, and over the last decade plus, I've been working closely with investors, investing with partners, doing the operations, the management, the construction, and helping investors and everyday home buyers and sellers get to it in one way or another. Okay, so a big thing that I've been talking about on my YouTube channel, and I definitely encourage you to check out some previous videos, is where I talk about capital strategy and operations for real estate investing and practitioners who serve or work with real estate investors. Okay, so in today's session, I'm going to take a deeper dive into the capital aspect because I think it's just so critical. And for those, who are in the space, I think, the longer you're in it, the more that you start to see and things change. The market changes, interest rates change, the cost of, labor and material changes. And so we have to be able to adapt and pivot and continue moving forward. Okay, so before I take a deeper dive into what is, private money, private equity, and leverage, I do want to encourage people, you don't really need capital necessarily to get started investing in real estate, okay? But it sure makes it a heck of a lot easier, all right? So I mentioned some of my background. The first 8 to 10 years or so that I was a real estate practitioner, I was able to do some investing, but I didn't really have much money at all. And so I was able to learn a lot, but it really wasn't until I gained enough experience and gained enough confidence to be able to start asking for money, basically. That's when I was really able to do more acquisitions, was able to grow my portfolio a lot more efficiently. So again, you can get started without necessarily having a bag of money, but it may be more challenging, and you're gonna have to get more creative. You're gonna have to figure out how you can find opportunities, okay? That's one way to get rolling. Another way to get going is to figure out how you can serve other investors or how you can assist other property owners with their investments or with their buildings, or however that looks. And then from there, as you're growing and getting experience, I encourage y'all as early as possible to look at the capital aspect, because it's gonna help tremendously. Okay, so when it comes to equity, right? Let's go over that first. Private money, private equity, right? When I think of equity in a house, let's say, or when most people think of equity in a home, you think of, what's it worth, or even deeper, like what is the difference between what it's worth and how much is owed on it is your equity, okay? And another way that I see equity is ownership, okay? So besides real estate, people think of the stock market. Some people, when they think of the stock market, they think of when they buy a share of a certain company that's publicly traded, you get an equity. That's the equities market, okay? And so for real estate investors, right, you got private money and you got private equity, right? The private money can be used as equity, or it can be used as leverage, or it can actually be used as both, okay? But the equity, okay, when I think of equity, I think of ownership, okay? So as I mentioned before, on a property or on a house, if there is a mortgage on it, right, the equity piece or the ownership piece per se is going to be the spread or the difference between how much debt is on it and what it's worth, okay? And so having a better understanding of the private money and the private equity and how you can leverage those two things is going to help you as you are coming across different opportunities, as I mentioned before, as you're serving, investors, however that looks, whether you're a lender or a property manager, a contractor, or maybe a broker or agent. A lot of my message is kind of tailored around those practitioners because that's what I did for years. And so my frame of reference came from, all right, let's get in and let's find some opportunities. Let's gain some experience as an operator, figuring out the construction and the property management. And then I started to look at private equity. Okay, so private money, as I mentioned before, can be used as a loan or it could be used as equity. Okay, so if that private money is going to be used as equity, right? And you're going to leverage that, that means that either you or someone who is going to own that property with you, right? If that private money, let's say it's a capital investor, a private money investor. And what I've done, what a lot of investors do, is we end up partnering with that private money investor. And we end up putting together some type of agreement, or we're definitely, in my case, we're gonna have an entity. A lot of times it's an LLC. So my private money investor, he and I or she and I have an entity, it's an LLC, okay? And my capital investor is gonna put up the money, right? In the event, or as it goes with equity, right? Because we decided to leverage it, that means that we're gonna use some of my private money investors' money, okay? And we're gonna go get a loan, and then the difference is gonna be the equity. So a lot of investment properties, or if you're gonna refinance an investment property, your maximum LTV or loan to value that you can get is gonna be somewhere between 70 and 80% loan to value in most cases. And so that difference, whether it's the 20% or 30%, that's the equity piece, okay? So again, the private money can be used as a loan or it can be used as leverage, which in that case, it's the loan. I don't want to confuse y'all. And I got some help. Give me a minute here. I'm going to refer to AI. I used Grok AI to get some assistance with this as well. So depending on, the agreement or how things are set up with your capital investor, how much capital they have available to invest, okay, if they truly want in on the deal, or if they want to just loan the money, then you can determine how you can invest or how you can utilize or place that capital more efficiently so that you don't end up losing it or put yourself under the gun or put yourself in your capital investors' time and money and energy at risk of loss, okay? So again, depending on how much capital he or she has available and the arrangement that you have with them, okay, sometimes the capital investor is gonna allow you a certain amount of time before you need to pay their money back, and they may even charge you a certain interest rate on that money, okay? If that's the case, then you have to be even more strategic and more conservative or cautious with how you place that capital, which is the case for a lot of investors who are getting in and getting out, doing fix and flip, wholesale, quick turn type of transactions or short-term transactions, which, as some of y'all know, the reward can be great. However, the risk in a lot of cases is super high when you have to get in and get out. So again, you got to determine, based on how you want to operate, how you want to invest, is it really worthwhile to work with that particular capital investor or lender, however it's set up, okay, based on what you can negotiate with them or based on the cost of their money or their terms. If they are willing to go in with you and there's not necessarily a time limit or a cost, meaning that they're going to go into business with you as an equity capital investor, equity partner, JV partner type of thing, and they're not necessarily going to charge you interest on the money that you're using, and they don't necessarily have a time frame or a deadline for when that money needs to be paid back or recouped, then you have a lot more flexibility. You can go in, and the key part of that is they get ownership, okay? So in some cases, the private capital or the capital investor, they may want to charge money for the use of their money, right? And they want ownership, which can make it quite a bit more challenging for you as the operator, you as the person on the ground making the whole business move, okay? So you gotta, this is huge because a lot of investors, I didn't learn this in business school. I got a degree in business administration, entrepreneurship. I did not start learning about this until I had been doing real estate for almost 10, 11 years. So for those that are serious, listen, check out the past videos. I encourage y'all, because a lot of investors, we get in the game and we're trying to figure out how we can make it happen. And we get told that we don't necessarily need money, which is true to a certain extent. But if you're serious about growing a real estate portfolio or growing a real estate enterprise that you can continue acquiring properties for years to come, if you want to keep the properties, okay, if you want to grow your portfolio, then it's huge to be able to understand the different types of funding and financing that's available for real estate investors. So this is it, right? And so I did a couple different prompts on Grok AI, as I mentioned before. Okay, I mentioned private money, I mentioned private equity, and I talked about those two a little bit, but I didn't really get into the leverage piece so much. So let's get into that. And the first prompt that I did last night on Grok AI, I asked it, I said, what does leverage refer to in a financial or business sense? Because I just wanted to do kind of a general thing first. And then later on, I asked it to use real estate and investing. But first, okay, what does leverage refer to in a financial or business sense? And I'm not going to read all of it. I'll probably just read the first part and the last part. Okay, in a financial or business context, leverage refers to the use of borrowed funds or debt to increase the potential return on an investment or project, okay? The core idea is to use a smaller amount of your own money, known as equity, okay, which could be someone else's money too, all right, and a larger amount of borrowed money to amplify the profits you might earn, okay? So key part about leveraging capital is you are able to do more transactions if done effectively and well, and your returns are going to be higher. Your cash on cash returns, that's one of the main ways that we look at it, okay? So, okay, that was the first part. The last part, it says, which is key, however, leverage is a double-edged sword. While it can magnify profits, it also increases risk. If the investment does not perform as expected, losses can exceed your initial contribution or your capital investor's initial contribution, and you're still obligated to repay the borrowed funds, potentially with interest, okay? This balance between opportunity and risk is a key consideration when using leverage, all right? So that's huge because especially now, the environment, things have changed in real estate. As I mentioned before, that's part of it. It seems like every 6 to 12 months, maybe every couple of years, there's something different that we have to work on. or we have to be mindful of, even if it's the use of AI or social media, right? The cost of the money I mentioned before, the cost of labor and material, the cost to be able to get into a property now is a lot higher than it was 5, 10, 15 years ago. So we got to be mindful of this. Okay, so because a lot of times when investors get into investing in real estate, they may use some of their own money, they may use someone else's money on top of that, and then they also are using leverage from what's known as a hard money lender or some type of short-term debt. And then on top of that, we end up taking on renovation projects, and we only have a small window. It could be 6 to 12 months to be able to finish the renovation project and then pay off that hard money lender. And then hopefully you're able to recoup the capital that you and your investment partner or private money lender have on top of that. Essentially, that's what a lot of investors are doing. You got leverage on top of leverage. It's kind of crazy. And we're adding construction to the mix, and we're on a short time frame. Do you see why now more than what we've seen over the last 6 years for sure, 6 to 10 years, absolutely, we have to be more mindful about how we're leveraging, how we're using other people's money. And then, as I mentioned before, the strategy that we are going to deploy, we're going to use to deploy said capital. All right, this is critical. All right, so I did a couple other prompts, and I'm not going to dig too much into it. Let's see. All right, I asked Grok AI to tie the concept of private equity into the last prompt and talk about the difference between debt and equity for real estate. So let's see what it said there. Okay, private equity and real estate. Okay, private equity refers to investment funds that pool capital from investors to acquire, develop, or manage assets that aren't publicly traded. In real estate, private equity firms typically target properties or projects such as commercial buildings, residential developments, or distressed assets, which is huge for residential real estate, fix and flip, that sort of thing, wholesale as well, with the goal of generating returns through rental income, property appreciation, or both. Okay, so a key part on this one, they mention funds that pool capital, investment funds that pool capital from investors to acquire, develop, or manage assets. That's it. So it could be just you, that you're doing it on your own and you happen to have a good amount of capital to be able to do that. Or it could be you and a group of investors, hopefully on a larger project if you're going to get more than 2 or 3 investors' capital involved, because on residential real estate, it may not make as much sense for you. Okay, it could be ideally you and one other person who you have an entity with, or they have deep enough pockets to where hopefully they can fund the purchase and any renovation or upgrade needs. And then they give you ample time to be able to recoup that capital. And the greatest way to be able to do that is over time. Okay, as much as I enjoy the renovation process, working with my contractors, it's kind of a rush to be able to get through that, but it's risky. And for a lot of investors, it doesn't work out so well, especially now. So I want to kind of bring it down and talk about, some of the stuff that I've been doing and what I see here in the Kansas City market, because some of y'all are going to want to put this to use, right? And so I've had multiple friends, associates reach out, or I reach out to them. They see what we're up to and they want to be able to invest capital more passively. They have income from a business or a job. Some of them are invested in the stock market. Some of them are doing Bitcoin and crypto or whatever. Some of them got side hustles. Some of them are doing all of that, right? But they want to be able to put money to work that's a little bit more passive, because all the other stuff, you got to show up to work. You got to keep an eye on the stock market. You got to keep an eye on the prices of Bitcoin and crypto to see what's going on, because one day to the next, things can change in a hurry. Whereas with the real estate, whether you're using the private money as leverage and you're borrowing that money, and whoever you borrow that money from doesn't have any equity or ownership, or if you're using that money, again, and you go in together on an entity, you run the show, they put up the capital, they get ownership as well. Hopefully you're shooting for the long run, okay? So in and around Kansas City, as I mentioned before, to get into a property now is a lot more expensive, okay? So I tell investors, if they want to rock with me and they want to be able to do one good deal and we can make that happen rather quickly, then we're gonna need 20 to 30% down, maybe less, but that's going to be few and far between. Can we do it with less than the 20 to 30% down? Yes. Can we rely on being able to do that over and over again and actually grow an enterprise and a portfolio? Maybe. There's different opportunities out there. I just borrowed 10 grand on one of my investment properties. This was a rare situation. I had bought this property 7-8 years ago. Okay, I was about to pay it off. Okay, and so because I didn't need to borrow that much, and because the lender was going to be in first lien position, and they just so happened to exit some property and had some funds to invest, I got kind of lucky. I was kind of sweating on figuring out how I was going to, get that money, right? So that 10 grand, and something I didn't mention before on the leverage piece, if you're going to use that private money as a loan and you or your capital investor wants that capital to be secured by the property, it's going to be either in first lien position or second lien position. Okay, that's a key thing. The 10 grand example that I mentioned a second ago, because I was about to pay the property off, the couple that loaned me the 10 grand, they're in first position on a $140,000 house. So that's pretty safe. But those types of opportunities don't always come up. Whereas I can look on the MLS, or I can reach out to one of my investor buddies or wholesalers. I could do a post on Facebook. I can go shopping today and find a house in a B-class area. For those that know, have been tracking, I'm gonna go look for a $200,000 home, and I'm gonna put 20 to 30% down. So long as I have investment capital with deep enough pockets, I could do that over and over and over again. What I cannot or may not be able to do over and over again so effectively is buying properties subject to the existing financing for little to no money down, or finding 10 grand to 30 grand lending opportunities where I could be in first lien position. Trying to build an entire portfolio and grow my enterprise that way is going to be a lot more challenging. But if I could do all three, sign me up. I'll do first lien position loans. I'll do second lien position loans. I will buy properties subject to the existing financing, as well as creatively when I can negotiate with a seller that's going to do a carryback, okay? And I will put 20 to 30% down on properties that are listed on the MLS today. And again, it goes back to having access to the capital, the right types of capital that then you can go deploy more effectively and efficiently. So for those that have been tuning in, I encourage y'all, while you're learning things about real estate, while you're gaining reps as a wholesaler, maybe you're a property manager or a contractor, or you might even be, a lender or an appraiser, and at some point in the future that you want to invest in real estate that produces cash flow, right? Maybe if you're already doing it, right? And you want to continue growing your investment enterprise or your portfolio, I encourage y'all to look at working with capital investors, how to raise capital, what is private equity, how can we, place capital more efficiently and effectively based on not only your needs or my needs, but the needs and how I can use that investor's capital, that capital investor's money, right? There needs to be a synergy. There needs to be an alignment. I believe that there needs to be some transparency as well, so that I'm not just accepting money because I'm hungry to do a deal or hungry to grow my portfolio, and then I have to later on figure out and scramble around how to take care of the short-term debt, how to get enough money or additional money to get through a renovation, how after I even finished the renovation, because the appraisal came back low and we went over budget and past the deadline, now we gotta figure out, okay, we need even more money to bring to the table to get the refinance done. We've been through this. I've been through it numerous times, okay? So by the time we get through that, right? You can do that, find out, mess around if you want. Telling you, figuring out how to raise capital that can be placed for the long run, then you can go invest and invest or loan capital or use capital in ways that'll produce monthly income, monthly revenue, monthly cash flow. In our case, in my case, for sure, I'm trying to make it as passive as possible, not only for me, but for my team, for my capital investors, okay? And being able to do that strategically, you know, is huge in two main ways, okay? And I'll leave it here. Private lending opportunities for sure, and then seller financing. And I talk about both of those and a whole lot more on some of my previous videos. So if you like what you've heard, click the like button. The goal, the plan is to continue doing videos each and every week. So subscribe if you want to learn more. Feel free to reach out and I can help maybe do a deal with you or help advise a little bit, help get you pointed in the right direction. I can talk about how I did real estate for 10 years with little to no money and was able to kind of do some deals, and then how things changed after I really got serious about private capital and private equity. And you know how to reach me. All right, thanks for tuning in, y'all. Peace.